Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look at the Fang stocks, I guess Fang plus Microsoft. There's been a lot of run up in the market, obviously, over the past 30 days or so. And I want to ask the question, hey, is now a good time to buy the Fang stocks? Is this still a good value, or have prices run up so much that you're just better off waiting for the next dip? As always, my stock picks and projections are my opinion. Please talk to a financial professional before taking on any risks in the stock market. But if you do enjoy stock market analysis like this and getting investment ideas and watching personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everybody who's signed on so far. All right, so as I mentioned, stocks have run up quite a bit, and anyone who's been in the market and hopefully has been holding on to their tech stocks have certainly noticed that prices are getting higher seemingly every single day. This simple green chart here is just the NASDAQ composite, and you can see that we're already over the dip that we saw in late March, and in fact we're starting to get above the trend line that we saw in February. So the NASDAQ has certainly been streaking higher, and there's a lot of folks out there right now, myself included, who wonder like, man, has this thing just gone on too high? Should I just sit on the money and wait to see what happens with the pandemic and the news that comes out every day? Well, let's take a look at each Fang stock and see what the data shows. All right, first on the board today is Microsoft. And Microsoft, we're just going to go strictly off valuation measures right now. So, see the current price at the time of this video was $214. You have a trailing PE off of today's 214 of 35.65. And I highlighted the green box here. As you can see, these are annual figures dating back to 2014. And if we look at the line, from a trailing PE standpoint, you can see that you could have picked up Microsoft from a trailing PE valuation of 29.77 back in June of last year. But there has been other times, notably in 18, 17, and 16, where the valuation was, at or above 35.65. Looking at the forward PE, this last update was from March, and you see that from a forward standpoint, a little bit higher, but not to an obnoxious level from a forward PE standpoint. And then PEG ratio, which is supposed to take into account the expected revenues that are coming into Microsoft, that is definitely eked up a whole nother point. You want to be closer to 1 if you're looking at that metric, and you see that even since June of 19, you've added 0.8 to that number. Similar on price to sales. That number's running higher than it has run over the past several years, almost by a full point over 2019, and running about 3 points or so higher than back to 2017. Okay, so what kind of upside do analysts have in mind for Microsoft over the next 12 months or so? For that, as always, I look at TipRanks. I'm a paid subscriber at TipRanks, and my referral link is down below. If you're interested in checking out the service and potentially supporting the channel, then please use that link. TipRanks gives you pretty good insight on what the best performing analysts are saying about a particular stock. It does go deeper into some of the small cap stocks. You also get hedge fund activity, insider trading, things like that. So I find it very useful. On the Microsoft side of the coin, we have 18 buys, 1 hold, and 1 sell. But from a median price target, it's coming in right now at $213.89. That's actually a couple points down from where we are today. So when we think about Microsoft from a should you buy this in Q3 of 2020, I would say we're reaching that point when the price has definitely got up there. There's been almost any other time but now that you could have purchased Microsoft and gotten a better deal on it. However, from an outlook standpoint, if you're in this for the long term, call it 3 years plus, then, you know, we all know that Microsoft's a great company. They're on solid footing. The stock will go up from here. So I think the simple advice is, if you have the opportunity to wait, we'll almost certainly see another dip in the market this year, likely 2 or 3. Probably better to just hang on and try to snip in, you know, a 5 or 10% discount, and then of course hold it for long term from there. All right, next stock on the board is Facebook. Price today of $242.26. That gives it a trailing PE of 33.24. And again, we look across the rows. From a trailing PE perspective, you're running about right in line with what you saw in 19, 17, and 16 while Facebook was going through a lot of growth. But from a forward PE perspective, and this is where we start thinking about the outlook of the, you know, call it next 6 to 12 months, with advertising dollars likely to go down by most companies. You can see that forward PE of 33 makes you wonder if, you know, this price isn't a little hot right now too. And even on the PEG ratio at 1.42, that's running hotter than the past 4 or 5 years. Price to sales, I would argue, stands about average, although again, your target in that time frame is going to be closer to 1. All right, on the tip range side of things for Facebook, we got 27 buys and 4 holds, so a little bit stronger of a buy sentiment from the best performing analysts on this one. You got a median price target of $248.20. That's only 2 percentage points up from where we stand today. So again, I think that this is another one. If you believe the market will dip sometime between now and December, I don't think you're missing out on a lot of upside for waiting to buy Facebook. And you could have the opportunity to again slice off 5 to 10% of its current price. Assuming you're a long-term investor, Facebook will definitely go up from here. At least that's what all the indications are. We're just trying to keep our cost basis as low as possible so that when it comes time to sell the stock, you've gotten in at a great price. All right, let's take a look at Apple. Current stock price of $381.96. That brings with it a trailing PE of 30.03. And looking back at Apple's trailing PE marks, we are definitely in rare territory. Over the past, you know, whatever this is, 4, 5, 6 years, you have a trailing PE that's running higher than it basically ever has, going back to 2014. Same thing on forward PE at 24.27. We haven't even seen forward PEs in the 20s on this chart dating back to 2014. PEG ratio, I'll call that one about even on this one. You got a 2.02, and you can see scattered through the different years, you've got some other 2s showing up. And then price to sales coming in at 6. That is definitely higher than anything we've seen in recent history with Apple. All right, let's take a look at the tip rank analysts. We've got 23 buys, 4 holds, and even a sell in there, which was a little strange just because if you're in Apple, you should be in it for the long term. I don't think this is a stock that I would sell, but I certainly would expect to hold it for a long time. You got a median price target of $358.08. And at least at this point in the video, that's the lowest downside. It's only 6%, so we're not talking about a stock that's going to tank here. But when you look at the numbers overall for Apple, once again, you're trying to measure upside versus downside, right? If you buy today, are you getting the best deal with the most potential upside, or will waiting give you an opportunity to get it for cheaper and maximize the upside, even if you're in it for a long-term hold? I think that's definitely something with Apple. Most people might want to sit on their hands for now and wait for that opportunity. The one thing we have to be careful about waiting too long on Apple, though, is there's a lot of sentiment about a big call it end of Q3, Q4 this year if those 5G phones come out. So look for a market opportunity maybe over the next 4 or 5 weeks. And if you don't see it, then you still might want to get in around this price just because they're projecting a big holiday season for Apple if everything in the 5G world goes correctly. All right, next up is Amazon, the infinitely growing stock. Amazon now up to $3,124. That gives it a trailing PE of 149.18. We go back in time a little bit, and even in 19 and 18, you had a trailing PE in the 80s. So this one appears to have run up a little bit. It's hard with Amazon to go back too much further. You see in 17 you had a trailing PE of 297, and back in 15 it was 951. So much has changed at Amazon with the way AWS has really boosted their bottom line. I'll leave it at the trailing PE is running up higher than we've seen in the recent past. From a forward PE perspective, again, you're getting a number in there that we have not seen over the past several years. So I don't know if it's necessarily concerning. It just tells us that there might be a better time to buy. PG ratio has actually tripled since December 31st of 2019. And then you go to price to sales and you've added another 1.5 points on that metric too. All right, so on the tip rank side of things, we got 36 buys, 1 sell, 1 hold, median price target today of $2,881. That's minus 7% at the time of making this video. So, broken record here, right? Everyone still says buy. You just have to know the growth for the remainder of the year as far as the stock price goes. You may not see that much of it. Is Amazon an awesome long-term buy? I have yet to see anyone poke a hole in that theory, right? We're just trying to get in and lower the cost basis if possible. Looks like there may be a time to do that with Amazon if we get some flutters in the market. All right, moving along to Netflix. Current stock price of $502.30. And you see that puts the trailing PE at 101.74. Scanning across the row there, we see that the 101, it's not the most expensive. You had 103.71 in 2019. However, you also had some spots in the 90s over the past couple years. Forward PE right now at 75.76. That is definitely higher from what we saw in 18 and 19. And PEG ratio and price to sales ratio are also up compared to 19 and 18. And this is the struggle that we may see with Netflix over time because the growth opportunities are not as easy, right? You have to start digging into international. I'm sure they got a big boost from the pandemic and people, watching movies at home. However, it's not easy pickings from a growth story anymore in America. So you have to really pay attention to that international game plan and see what opportunities are there. All right, Netflix always gets a lot of interesting takes from the analysts. On the tip rank side, we have 22 buys, 6 holds, 4 sells. Median price target of $479. That's about 5% off of today's price. And for me anyway, Netflix is not as much of a sure thing in the long term as I think some of the other companies we talked about. However, it is a good company. I would be much more inclined to own Netflix in an ETF, which I actually do. However, if you are an individual stockholder and your cost basis is, let's just say, in the 400 range or lower, then I would probably be waiting to see a little bit of a dip in Netflix this year. It's going to be hard because the pandemic is probably going to tell a good story for a company like Netflix. But you don't necessarily need Netflix to fall down. You don't need any of these stocks to fall down, right? You just need a market correction, save some cash, go in, bring your cost basis down more, That's what we're trying to do in this exercise. All right, last on the board is Google, coming in with a stock price of $15.13. And you see that gives it a trailing PE of 30.51. Going back in recent times, that's definitely a little hotter than Google has run. However, the forward PE is actually a little bit lower than what we saw in 19 and 17. Then you get down to PG ratio and price to sales, and those are not too far off levels when I would argue times were better for Google, not because Google's slipping, but they're obviously going to lose ad dollars this year as retailers shift their strategy in a tough environment. All right, on the tip rank side of things for Google, we got 26 buys, 1 hold, median price target of $15.40. That's about a 1.5% upside from today. And I'm not going to say that Google is wildly undervalued, because they're really not. But what you can say about Google when you start to compare it to, say, Microsoft and Netflix, they have not run up quite as much. Does it make it the best stock buy of all time right now here today? Not necessarily. But this could be one where if you're looking at a FAANG stock and you're thinking about establishing a position, Google might be one that you wait on a down day, and it's not going to be as bad off for starting a brand new position and hoping to get some immediate returns. The big thing you have to ask yourself about Google, though, going forward is the internet ad marketplace has changed a lot. Facebook and Amazon are definitely coming in and stealing some market share from Google. Google's core search business, and when you throw in things like Google Maps and the voice systems that are in everybody's house right now, I really like where Google stands from a fundamental standpoint, and this is one of the few FAANG stocks that I own individually. What I'm watching for out of Google over the next couple years is Google Maps in the self-driving car revolution. You know, Google Maps in that kind of like Tesla world. Does that become something? I think it can. I just don't know how long it will take. And then I also see Google catching up with Apple in the sense of as growth targets come down, particularly in America, will they start offering a dividend soon? That's going to be a really interesting time. You've got Microsoft with a dividend. You have Apple, as I mentioned. Will Google join it? Perhaps. But we're really starting to see the maturation of the FAANG stocks away from so much growth and more into, just producing absurd revenues, where many stocks count on growth targets to pull their price up. Some of these FAANG stocks are going to have to consider maybe a small dividend in order to keep investors happy. All right, guys, so there you have it. A quick look at the FAANG stocks, including Microsoft, here in July. Is it a good time to buy into these stocks in Q3? I would say for the majority of them, I would probably take my chances and wait for some volatility in the market and try to shave a couple bucks off of them. They're probably all awesome long-term holds though, so if you're just buying, closing your eyes, and you're going to wake up in 10 years, not sure how much it matters. I like to manage my cost basis unfortunately on a molecular level sometimes, so I'm always watching things like this. What do you think of the FAANG stocks in Q3? Let me know in the comments. Please give me a like and subscribe if you enjoyed this video. We'll see you on the next video.